In this video today, we would be looking at Dow Jones and how it is placed on the technical charts. Now, the first things what we have seen right now has been a correction, right, from somewhere closer to 16,500 plus to almost 15,300. That's a more than 1,000 points correction, and that too has happened in a very small amount of time. So somewhere closer to 2-3 weeks, and this is the correction we have seen. So let us look at how oversold the indices are as of today. So the parameter which we are looking at is RSI, and this is how RSI is looking. So when we look at RSI, it has almost come back to the same bottoms, which is closer to somewhere closer to 25, 28 RSI. Now this has been the band for the RSI over the last 2 to 3 years for this index. Let me go a bit deeper. So as I unzoom more, you will notice even the bottoms of 2008 and 2009 were made closer to this RSI zones. So in terms of oversold values, we are highly oversold at current levels. Then let us look at what has been the reaction in the last couple of years after hitting such oversold zones. So this is the first time when we went to closer to 20 RSI zones. Let us see what the market did. Market made a low somewhere closer to this point, around 10,800. Or rather I would say 10,600 odd. Swiftly bounced back by 1,000 points, or somewhere closer to at least 800 to 1,000 points. Then made a couple of lows in the next 2 months, giving a strong positive divergence here when it made a new low. If you notice, the RSI is way higher than the RSIs of 1820 here. Now what happened post it is, this created the next big move of almost 20-30% from the zones. Post that again we saw a correction and going back to 30 RSI. So the first one, the bounce was not huge, but the next bottom, which was a bit lower, created a significant positive divergence because the low was much lower than this low and RSI was almost at the same point. The next instance comes in here. Where RSI made a bottom as well as the indices made a bottom and it just ran away. So in this case we did not get any new lows with a positive divergence. Then the next attempt when it came to such lower RSIs was here. Another low in the next few sessions with similar RSI levels led to a bounce. A much bigger bounce from the zones of 14,800 to almost 1,000 point bounce. Again it made a new low or almost very close to it, and the RSI was much higher, creating the move of the last 2-3 months. Right now the index is back to similar RSI levels out here. Now what do we need to see is whether we take a bounce back from here almost 400-500 points, then make another new low or positive divergence. All said and done, what we see is every time when the markets have touched an RSI of 25-28, it has actually led to a major important short-term bottom formation and a bounce back of almost 1,000 to 2,000 points also. So minimum case we would be looking at a 800 to 1,000 points bounce back from these zones. Now what we'll do is let us see at what are the technical support zones in this case. So I've just removed the trend lines. So what I try to do is join the last two important bottoms, which is this one being joined to the November 2013 bottom, and I stretch it out. And to see if this is significant, I create a parallel line to get a channel. If this channel is also being followed, then this bottom would also be followed in the worst case. So we get a worst case point somewhere closer to 14,800 to 15,000, and we have previous bottoms here as well. A shorter trend line, a shorter term trend line might be broken, or we might be very close to it right away. So we've just broken below this one. So what we see it as, it's a proper channeled move. The worst case scenario, we could be looking at 15,000 plus minus 200 points, and that should actually be an entry point, and look for a move of almost 1,000 points from the zones. So the final conclusion would be, one should be looking at long positions on further dips. So we might actually say bottom out at 15,300 itself, or maybe worst case to 14,800 to 15,000. So an ideal entry point would be somewhere closer to 15,000 to 15,300. And then look for a pullback all the way back to 16,000 levels, or even looking at test of the previous highs. Also, if we notice, this RSI zones have kept a hold before also, right from the lows of 2009. – 2008. And even the previous bounces. The only time we've seen this not work is in the end of 2008, wherein the bounce came and the positive divergence even led to a much bigger fall. So all said and done, at current levels it seems an interesting entry point on Dow Jones, which is coming up in the next few days. Thanks a lot. Let's hope we see a good bounce in the next few days.